Most drivers believe their car insurance protects them. In 2026, that belief is dangerously wrong. You pay every month, but you're buying assumptions, not real protection. Modern policies look safe on paper, while quietly shifting risks back onto you. If you haven't reviewed your coverage recently, you are gambling with consequences. This mistake becomes obvious after an accident forces reality. You are not insured. You are assuming. You are not insured because you pay a bill. Payment only proves you comply with a system you barely understand. You assume coverage means safety. You assume limits are enough. You assume fine print will never matter. Insurance companies rely on this assumption. These price policies knowing most drivers will never question details. In 2026, insurance is not protection by default. It is a contract that rewards attention and punishes neglect. When you skip understanding how coverage works, you transfer risks back onto yourself. That risk doesn't show up monthly. It appears suddenly during accidents, claims, and disputes. At that moment, assumptions stop protecting you. Reality does. Being insured means knowing exactly what fails when something goes wrong. Assuming means discovering those limits too late. Most drivers learn the difference the expensive way. They pay for confidence, not clarity, and regret replaces certainty afterward. That lesson costs far more money. Car insurance in 2026 is designed to confuse you. Car insurance in 2026 is not built to be understood easily. It is built to appear familiar, while quietly becoming more complex every year. Pricing is no longer based only on age, location, and vehicle value. Your driving behavior, mileage, and patterns are constantly monitored and reinterpreted. Some policies lower rates temporarily, then raise them once habits stabilize. Others advertise simplicity, while hiding adjustment rules deep inside contracts. This complexity benefits insurers, not drivers. Confusion reduces questions, delays comparisons, and keeps customers passive. When people feel overwhelmed, they stop challenging pricing logic. That silence protects profit margins far better than transparency ever could. If you feel unsure reading your policy, the system is working as intended. Insurance confusion is not accidental. It is operational strategy. Understanding less makes insurers more money year after year. Clarity shifts power back to drivers, and companies work hard to prevent that. The system rewards ignorance and punishes anyone who asks precise questions. That imbalance explains why confusion remains profitable in modern insurance markets globally. You're overpaying for what doesn't protect you. You are overpaying for car insurance coverage that feels responsible, but delivers very little protection when it matters most. Many drivers keep full coverage long after their car has lost most of its value. They insure depreciation out of habit, not logic. Paying more does not mean you are safer. It often means you are protecting an asset that no longer justifies the cost. Insurance companies rarely remind you to adjust coverage downward. Higher premiums look like responsibility, even when they quietly waste money. Emotional attachment keeps people insured for yesterday's car instead of today's risk. Meanwhile, the coverage that actually protects your finance stay unchanged or ignored. Overpaying feels safe until you realize your money was never solving the right problem. Insurance should reduce risk, not reward inertia. When coverage no longer meets reality, you are donating money to comfort, not protection. That mistake compounds quietly every single month. Ignoring this reality allows inefficient policies to persist year after year, draining money while convincing drivers they are being careful adults, making smart financial choices without ever checking the math. You're underprotected where it actually matters. You save money by cutting coverage that actually protects you financially. Low liability limits feel harmless until they are tested. Weak uninsured motorist coverage feel optional until the other driver has nothing. This is where cheap insurance becomes dangerous insurance. One accident can exceed years of small monthly savings instantly. Medical bills, lawsuits, and vehicle damage do not respect your budget. Insurance companies know most drivers underestimate these risks. They allow minimal limits because few people imagine worst-case scenarios. Underprotection hides behind optimism and routine. People assume accidents happen to others, not themselves. That assumptions collapse the moment fault is assigned. Suddenly, your policy limits become walls, not safety nets. Every dollar you saved earlier now works against you. Real protection is boring, expensive, and rarely discussed. It only matters once, but when it does, it matters completely. Drivers who underinsure learn this lesson too late. The financial damage outlasts the accident itself. Recovery costs, stress, and long-term consequences usually exceed what drivers ever expected, financially and emotionally. Why price comparison is a trap? Comparing car insurance by price is the fastest way to make the wrong decision. Monthly premiums create the illusion of clarity, while hiding the real cost of risk. Two identical prices can represent completely different levels of protection. Price comparison rewards shortcuts, not understanding. Insurance companies depend on this behavior. They know most people stop evaluating once the number feels affordable. Coverage limits, deductibles, exclusions, and future rate change disappear behind a single number. That number feels objective, but it is incomplete. If coverage does not match exactly, the comparison is meaningless. If deductibles differ, the math becomes dishonest. If rate adjustments are unclear, the quote is misleading. Price only works when everything else is equal, which it rarely is. Focusing on cost alone trains you to accept blind risks. That habit benefits insurers, not punishes drivers. Smart comparison demands effort, attention, and uncomfortable questions. Without that discipline, you are not comparing insurance, you are comparing illusions. Illusions feel cheap until reality sends the invoice. That bills arrive without warning. The real cost you never calculate. The real cost of car insurance is not the premium you pay every month. It is the moment you realize your policy does not do what you believed. That realization usually arrives during stress, confusion, and financial pressure. Accidents expose gaps, assumptions, and shortcuts you ignored for years. Suddenly, covered limits feel smaller than the problem in front of you. Time, energy, and focus disappear into paperwork, disputes, and uncertainty. This cost is never shown on comparison charts. It is emotional, financial, and mental. Bad insurance forces you to make decisions when you are least prepared. Good insurance removes decisions. Crisis arrives. Most drivers only measure money, not mental load. They optimize monthly savings while ignoring long-term damage. That trade-off feels smart until consequences appear. When protection fails, stress becomes permanent. The quiet cost is carrying risks you thought you transferred. That burden lasts longer than the accident itself. Car insurance is not about saving money. It is about refusing to lie to yourself about risks. If this video made you uncomfortable, that reaction matters. Discomfort means assumptions were challenged. If you want clarity instead of false confidence, subscribe. This channel exists to expose financial system before they expose you.